The semiconductor market has been giving a lot of semiconductor companies a dose of humble pie. Somehow NXP made a meal out of it by managing their margins, managing inventory in particular. Welcome to Drill Down Earnings, a quick look at the latest earnings from NXP Semiconductor. This is the business story behind one stock on a move. I'm Cory Johnson, Chief Market Strategist for the Futurum Group. So look, NXP earnings, really important company, a $57 billion market cap, the largest European semiconductor maker based in Holland. This Dutch company, so important in the chips that they make for some important sectors, not least of which automotive. And we know the automotive sector has been challenged this year. So what does it mean for the chips in that sector? We'll tell you that. NXP Semiconductor reporting fourth quarter earnings. They were not super strong, but there were some green shoots of growth. Wall Street analysts like to talk about beat or miss. It's kind of a miss. Revenues in line. Wall Street overestimating their earnings by about 9% of a share. So yeah, I guess we can call that a miss. But let's dig deeper into the business here. Not just the miss or the beat. What the business did, the actual numbers, sales, $3.4 billion. That's up 3% from the previous year. Profits, $703 million US, of course, dollars are US, of 4% for this company. And gross margins, 59.6%, pretty good for this company. But let's look a little bit deeper into the business beyond those headline numbers. Now, Futurum has an analyst who covers this company, Olivier Blanchard. He does a great job of covering NXP Semiconductors for us. He and I have been back and forth on Slack today. And he says, look, top line, good execution, steady margins, healthy cash flow, generating cash in a tough year for the semiconductor business. But there are four big businesses at NXP. Automotive, in an order of size, right? Automotive, IoT, communications, and mobile. So the automotive business, actually pretty strong. The semiconductor sales for NXP up 5%, even though auto sales, of course, were down. NXP is big in electric cars, and electric car business is growing. So rising sales in that world is good for NXP, and even though the rest of the automotive world not doing so well. The IoT business, kind of okay for NXP, up 7%. That market is really soft right now, and things are even worse. As I mentioned, communications, number 3, and number 4, their mobile business. Both of those two businesses got smaller, shrinking by about 5% each. So overall weak performance, or good performance in weak markets. And yeah, the semiconductor market has been giving a lot of semiconductor companies a dose of humble pie. Somehow NXP made a meal out of it by managing their margins, managing inventory in particular. They managed to reduce their inventory. If you look at inventory in terms of days of inventory, they reduced their inventory levels 134 days down to 132 days in a really tough environment to do so. How did the stock react? Well, the numbers came out. You saw it get a big boost and then kind of take a little bit of heat off that big boost when the numbers were first announced. Nonetheless, the stock's basically flat, which is really good for this business. Indeed, if you look at the last year, the stock's up about 17%. In the last quarter, about up 23%, as all the semiconductor stocks were getting a big rise out of excitement about AI. The trick for this company, though, was managing inventory. In automotive especially, inventory turns, they've been holding at 2.5 times of sales in a quarter. Here's NXP Semiconductor CEO Kurt Sievers talking about just that.
So no intention to increase channel inventory really in the first quarter. For the rest of the year, it isn't much different to how we've put this the past couple of quarters. We will only start to replenish when we see sufficient momentum in the market to justify that. So that means there is neither a guarantee that by the end of the year we hit the 2.5 inventory, which is our long-term target, nor will we do any fast or hectic steps here. So we will possibly start, because I do assume, and we come back to this later in the call, we do expect that there is some market recovery in the second half of the year, so that makes it more likely that we will start to replenish the channel by then. But again, it's really something which is a function of the market environment.
So the trick in semis often is not always giving customers what they want, but trying to figure out what they need. It's a tough game, and NXP did a good job of that. But what does it all mean? What's the big drill down earnings takeaway? And what's one number that tells us a whole lot more about NXP? I'll have all that right after this.
The Drill Down is brought to you by the Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So here's a quick drill down earnings take on the earnings from NXP Semiconductor in their fourth quarter. Kind of pulled a rabbit out of a lousy hat. $3.4 billion in sales, up 3%. Earnings up 4% to $2 billion. Most of their markets were challenged. Automotive, IoT, communications, and mobile were actually down. But they did a good job of managing inventory, and therefore they managed to get some sales increases in some businesses that were kind of tough, especially automotive. They did okay at. But I promise you the bite, the drill down earnings bite, one number that means a whole lot. And yeah, that's about automotive. 56% of their business last year was for automotive. And because they're supplying into the smarter parts of cars where semiconductor content is increasing, because they're supplying into electric cars where sales are increasing, even though the automotive industry is pulling back a little bit, you're seeing increasing sales because 56% of NXP sales is into automotive. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. Follow our quick earnings takes on Instagram or TikTok at Drill Down Pod. And you got our more robust earnings report at YouTube on the Futurum Group channel. And you can follow me on Twitter or X. We like to call it X now because, you know, that's what Elon wants. That's what we do. We call it X. I'm at Cory TV. Follow, like, subscribe, and please comment. Let us know what you think. We want to hear from you. Futurum is part of the 6-5 Media Group.